Hi, this is John Kamarianos. Welcome to a new edition of Capital Considered, coming to you this edition from Syros, an island in Greece, one of the Cycladic Islands. In fact, the capital of the Cycladic Island chain. It's Sunday evening here, late afternoon. U.S. entering its second week of war, and the question is, will skyrocketing energy and food prices hurl the world into a recession? That's the main question on investors' minds now. The current war between Israel and the U.S. on one side and Iran on the other has caused the price of oil, at least the front month contract. So we're in March. That's the April futures contract for oil delivery. West Texas Intermediate crude we're using here has driven the price around $57 a barrel to around $91 a barrel. Um, Not quite as much as it was at the start of the Russia-Ukraine war when I think it peaked at 120. But that's quite a move from 57 to 91. 20% of the world's oil flows through the Strait of Hormuz, um, 20 odd miles wide at its narrowest waterway off the southern coast of Iran. Um, Iran has done all it could in the current war to stop ships from transporting oil, and it has largely succeeded. According to oil expert Daniel Yergin in a piece he wrote in the Financial Times of London, as many as 90 oil tankers flow through the strait every day. Now virtually none are making it through. Also, Qatar is a major producer of liquefied natural gas and has and 20% of the world's supply of that commodity flows through the strait. Fertilizer, finally, also comes from the Persian Gulf. It's essentially nitrogen from reconfigured natural gas. And that kind of fertilizer nourishes half the world's food supply. So in addition to higher oil and natural gas prices, we are likely to see higher food prices. Most of the oil and natural gas that flows through the strait goes to Asia, but Asian countries are now bidding for natural gas going to Europe, making this more of a global problem, according to Jurgen. We've already seen prices at the pump in the U.S. rise, and we're likely to see them rise more. The good news is that world energy markets are more resilient and more diversified than they used to be. The U.S. is now the world's largest oil producer and among the largest natural gas producers. If oil stays at around $90 a barrel, that's still not as much as the 120 it reached when Russia invaded Ukraine, as I just said. And it may not be catastrophic for the global economy, but nobody knows how long the war will last and how high the price of oil will go. Things don't look great right now. They could improve. No one really knows. This chart, S&P, it shows how many ships have gone through the strait in recent months and how many are going through now. And you can see virtually the strait is virtually closed right now. So that's not good news for world energy markets and energy prices. That's the news. We don't know how markets will open tomorrow. On Monday, we'll see what happens, and I'll keep you updated. John Kamarianos reporting from Syros, Greece, for Capital Considered. Thanks for tuning in.
No information on this podcast should be construed as investment, tax, or legal advice. This podcast is not an offer for advisory services or to buy or sell securities. Before making any financial decisions, consult with a qualified professional advisor who can assess your individual needs and circumstances. Past performance is not indicative of future results, and all investments carry risks, including the potential loss of principal. Securities discussed in this podcast may be holdings of the host or his clients.